Hi guys, this is Mark Shawson, the Pattern Trader. Many years ago, when I got started trading, I had a mentor by the name of Graham Loving. Graham Loving was actually a colleague of my dad. Graham was an investment banker by day and a commodities trader at other times. Graham kind of took me under his wing and introduced me to trading, introduced me to technical trading, meaning trading based on price action. And I'll never forget that Graham Loving told me this one thing that took me about 30 years to figure out. And he said, you have to learn to love a loss. And at the time when I was just a teenager starting out, I had no idea what Graham was saying. It sounded really strange. Why would somebody love to take a loss? But like I said, it took me about 30 years to figure this out. And I think this is what separates experienced or professional traders from novice or beginning traders. And that is really understanding that a loss is just part of trading. By trading, you're not accepting risk, you're taking risk. And by its nature, you're not going to be right all the time. But I think that this is a concept that gets people quite stuck. And the reason why I bring it up is that every week I do something called the Master Pattern Trader Sessions. These are live sessions where I go through the markets and then take questions and answers from those in my program at the end. And at the end of last week's program, one of our members shared that she had been stuck in this losing trade for several years in the euro versus the Japanese yen. And so she wanted to know what to do with the trade. She wanted to know where, my thinking was on the euro yen. So in a minute, I'm actually going to go to the live charts of the euro yen, kind of discuss my thoughts there. And then I kind of had an interesting way for her to manage her way out of this losing position. And a lot of our members responded that they liked it. They thought it was a very novel approach on how to manage your way out of a losing trade. A lot of this stuff sometimes is, playing some mind games with yourself because once you're stuck in a losing trade, you're finding which way to justify staying in that trade. And again, what I'm going to do now is I'm going to go to the real-time charts, show you what my feeling is on the euro yen and how to manage your way out of a losing trade. In the chart before me is the euro versus the Japanese yen. This is a weekly chart, which means each one of these price bars represents 1 week in time. And in the video a moment ago, I was talking about this one lady's experience where she bought the Japanese yen at 137 2 years ago and has been sitting on this loss that has just been mounting and accruing for the last couple of years. Now, I don't think that this is a unique problem. It's estimated that 90% plus of people are losing in the markets, and I think trading psychology is one of the big reasons why. Now, the problem with not being able to take or accept a loss is twofold. First off, this is chewing and absorbing all of your emotional energy and financial resources for a lengthy period of time. And then it's also not allowing you to see the opportunities in front of you. And so we're going to talk about, how to counteract this. First off, you need to have a plan. You need to know when to get out so that when you're confronted with something in the market, you don't just freeze. And again, this is not a unique situation. We've all been there, and that's why you really need to have a disciplined plan and a way to get yourself out of these things. Now, I'm going to give you kind of a different way to manage your trades if you get into this kind of situation, but it really comes down to an assessment of what is going on. And so, as you guys know, I like to look at the big picture. This is a weekly chart, so that gives me a global view of what's going on. So obviously, I think in this period of time, you had what looked like a classic double bottom. Then the market started taking off, and then I guess FOMO starts setting in, where you get a fear of missing out. And this lady bought right at the top of this move. And to my mind, you have to be able to distinguish the real patterns from the not so real patterns. And what I mean here is that while this did look like a double bottom price pattern, With the word bottom in it, it should have yielded ever rising prices. But if you peel back and look at the big picture, to my mind, that was just a distraction move. The market often throws you distractions, throws you different patterns to throw you off. We see a similar double bottom right here. And now we're left to distinguish which pattern is real in the market. And so that's why I think you need to take a global view, step back, and be able to assess something from the long view. So the way I'm interpreting this chart is that I see that this is the governing price pattern. So we see this head and shoulders. It's kind of a different looking head and shoulders where it looks like a man or a woman's left shoulder. The peak is the head, and that would be the right shoulder. And then we have a neckline, and then once it careens to the neckline, it indicates that this, by and large, is going to go lower over time. Now you can see that after it broke lower, it retested the breakout area and formed another governing price pattern in the form of this double top. So to my mind, these are the governing price patterns. And when I say governing, once the patterns have been formed, they govern or dictate price behavior going forward. And so by virtue of the governing price patterns, I do expect the euro-yen to keep going lower over time. And so by this lady sticking with her position, she is going to keep losing. And so I kind of gave a different way to handle this situation, because the problem is once we've been hanging on to a trade for several years, as is the case of this particular trader, it's very difficult for now to just get out. And then our instinct is, what if this goes up? If I get out here? And that would, of course, be the worst feeling of all, where you hang with something for 2 years, you finally capitulate, and then it moves higher. And so what I suggested was a strategy to manage your way out of this kind of situation. And the way I suggested it was that, let's take, for example, that you're long 5 units. It could be 5 big units, 5 mini units, whatever the size of your position is, it doesn't matter. I'm just giving you this for the sake of example. So what I would suggest, since my thinking is that this will continue to go lower, is that you short an equal amount of units. So whatever your trade is, you go short 5 units. So now you're really in a neutral position. You have long 5 all the way up here, and you're short 5 right here. And so this would get you out of a situation where, let's say, the market starts rising and goes a little bit higher. Then what I would say, since my expectation is that the market is going to go lower, is that maybe you get out of 1 units, and now you only have 4 long, but you have 5 short. And so you start bailing out of your position a little by little, and then if it goes back down, you can start bailing out of your positions one by one. And to my mind, what I want to do is get into a situation where I'm net short, because I believe that this market is going to go lower. So by bailing out of 1 and having 4 units, now you have 5, you're net short 1, and then let's say it goes down, then goes higher, then you cancel out of the other one. Now you have 3 long and you still have 5 short, so you're net short 2, etc., until you bail out of your original position, and now you're in a short position, and you can take advantage of the move that is the primary or secular move. Again, this is not perfect. This is not going to extricate you out of your enormous losses that you took all the way up here. But at some point, you have to start getting out of this position that is consuming your emotional resources and your financial resources. And so ultimately, in order to have a consistent way of trading, you have to have a script which includes a method with an edge. So dependable trading revenue is a direct result of having a structure for producing winning trades. If you're winging it, you simply don't have a plan. If you're inconsistent, you don't have a plan. If you have a plan and you're inconsistent,
my guess is you have more than one strategy. So before a trader can accept losses flawlessly, they need to believe that they can produce profits. Otherwise, every loss is a life and death roller coaster of emotions, as it has been for this woman for the last 2 years. So to produce profits, consistent profits, and then big profits, you need a methodology that has an edge, a strategy that gets molded and adjusted into a trading plan that matches your unique goals and resources. So with that said, I will leave you here.
So I hope you've got a ton of value and a ton of input out of this video. And with that said, I wish you a healthy and prosperous trading week, and I'll see you next time.